Happy Sunday, traders. Hope you're having a wonderful day. This is Sage FT from the Live Trading Desk. We're going to go ahead and get into the review and rev up for next week, talk about last week, talk about a little bit that could happen next week, try to put a game plan together. And what we're going to do is we're going to introduce something pretty special that we've been working on behind the scenes here. First, let's dive into what we thought was going to happen at the beginning of the week. Well, if we first start off with where is the 200, the 20, and current price? Well, if we go back to Monday, it was looking perfect for a continuation run. Now, the reason we say that is when we are in the position of power, or position one, where all of these are increasing at an increasing rate in this hierarchical fashion, we assume that the market will continue to rise until this breaks structure. You'll see it on a smaller time frame here in just a minute. So now we got a little bit of action on Monday, Tuesday, and then we had a big move up, and it closed outside the Keltner channel on the daily chart. Now, we went back and we looked at all the other times that it did it, and the odds of it moving upwards were lower than the odds of it moving down, right? So we were prepared for this move right here, which it happened. But we talked about there has to be bloodletting, but don't get married to the position that this market is just going to continue lower until we move outside position one. It is buy the pullback, buy the pullback, buy the pullback, buy the green that overtakes red. All right, so that was the game plan starting throughout the week. Now let's watch what happened. Well, exactly what we talked about. Continue to rise, gets overextended on the 4-hour chart, and then they bloodlet. Now, notice it did not fall any more than right here. So this was our pinprick. This was get ready to go long. Okay, let's see what it looks like on the 15-minute chart. Accumulation, higher highs, accumulation. Catch the 200 catches up with price catches up with the 200. It bounces off of it. We go back into position one here, and it's all over but the crying for the shorts. Shorts try to get some traction. They catch no traction here. We get the spring boink move up. Textbook. Now, let's just take a little look at one of the moves on Friday and just how simple, or not easy, but simple that it is to trade this KISS chart. There's a video coming out. I'm going to go in depth into these trades that were taken. What we see here is we move into position one off of the opening bell, and it never even looks back. We go above the VWAP and never even looks back. Now, remember, we talked about that spring, okay, here. Now, I want to show it to you. This is the 15-minute chart, but I want to show it to you on the 2-minute chart. This was what told us to be very, very bullish, okay? In the live trading desk, I talked about it all morning long, right? There were 12,950 contracts traded in 2 minutes right here with the Mancini 30 over under to reclaim. It never closed below there. It never looked back. Once we got above VWAP, it never looked back. It touched the VWAP and it just took names. Again, there's a video coming out here soon. It's going to talk exactly about all these trades that we took, and I'm going to go in depth with it. All right, so with that being said, let's go ahead and look. It comes back and then it just goes again and again and again. Now one secret is, glamorous as it would feel and look to short all-time highs, it doesn't have positive expected value over 10,000 trades. So what can we expect next week? Well, there's not a whole lot of charting that we can do besides we just think the market's going to keep going up, or it's going to flatten out here and then make its next leg of wherever it's going to go. But if we look at the news, we don't have a whole lot of news. We have Fed at noon on Monday. We have retail sales Tuesday, and not a whole lot the rest of the week. So price is going to do whatever it's going to do. It might do it on low volume. If we are in the narrow range, make sure that you have a plan for your narrow range trading. And if we are wide range or outside the narrowest range of the last 7 trading days, make sure you have your 100 level trade for trading that way. We're going to have a video here shortly, as I'm saying for the 3rd time, that's going to show you the 100 level trade that we take, and I'm going to use today's price action as the examples. All right, so next week, I really don't have anything to say besides, unless we really start to break structure on the daily, this thing just gets boring, and it just continues up and up and up and up and up. Until it breaks structure on the 4-hour, it just gets boring, and it just goes up, 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 and up, and up. And there's no narrative that goes with it. We would really have to break structure below the 5,600s to start getting any sort of gas, but you've got so much fresh demand. Areas below that people are salivating to get into that, there's pent-up demand underneath it. And because people have to put dollars to work, otherwise their dollar becomes worthless, right? They have to find the vehicle to push their dollar greater than the inflation that's happening and the decay of the value of the purchasing power in the dollar. So next week, what we're going going to do is we're going to stay nimble. We're going to use the KISS chart, and we're going to find our 100 level trades. We're going to wait for our trades to come to us. I hope everybody has a wonderful, wonderful evening. We'll see you tomorrow morning in the live trading desk. This is Sage FT. Thanks.